Yeah, and now so you at Perpetual manage approximately $25 billion
Yeah, around
worth of
about
money.
$25 billion, yeah.
Which is a lot, and that means you've got a lot of assets at your disposal in order to get more access to these companies and who you're lending money to.
Correct.
Your average Joe on the street can really get access to your cash rates and your term deposits.
It's really hard. It's a really good point. I mean, in some regards, the most commonly traded security that people are familiar with are shares. You can trade them on exchanges. Fixed income, to a degree, isn't traded often on exchanges. They're traded effectively what they call OTC, or over the counter. So the minimum parcel size for most fixed income assets outside of cash and term deposits and things like that are $500,000. And not many investors have just one $500,000 investment to make one loan.
Well, it's because you're lending money.
Correct. The key risk in fixed income is asymmetric. Make a bad loan and you might not get your money back. So ironically, you actually want to manage risk in fixed income differently to equities. I think you're rewarded for concentration risk in equities. I'd be happy to own a portfolio of 10 or 20 shares, but in fixed income, we would average probably 100 loans. Because if one loan doesn't perform like you expect, you've got 99 other loans kicking in, where the reality is if you've got 5 loans and one goes bad, you could be waiting 20 or 30 years to get your money back on the total portfolio, and that's the risk that investors need to be aware of today. There are plenty of products that are offering people yields of 7, 8%. How can you own fixed income and it be defensive and predictable when cash rates are 75 points and someone's targeting a yield of 8%? There's something wrong there.
Yep.